Activist investor Elliott Management is taking a significant stake in PepsiCo. But despite today's 2% pop, shares are still only flat since January. Leslie Picker has the details. Hi, Les.
Hey, Court. Yeah, this may not be helpful in your hunger issues, but Elliott says if its proposal, if enacted, could deliver 50% upside to shareholders. The activist says Pepsi trades at a substantial discount to many historically slower growing peers, as well as to its own historical average valuation. The activist diagnoses Pepsi's underperformance as, quote, driven by persistent share loss and margin pressure within its North American beverages business, combined with a North American foods business facing decelerating growth and declining profitability. On the beverages side, which includes Pepsi, Gatorade, and Lipton, the firm wants strategic reviews of the brand portfolio and bottler refranchising and to reinvest in core products. On the food side, which includes Fritos, Lay's, and Doritos, Elliott is also recommending streamlining and right-sizing the cost basis with the current environment. In a statement, Pepsi said it's, quote, reviewing Elliott's perspectives within the context of its strategy to drive sustainable growth. Elliott says it's taken a $4 billion stake, making it among Pepsi's largest investors and one of Elliott's largest investments ever. But so far, it has not called for any kind of board change or firing at the C-suite level. Court.
Listen, this pretty much tries to undo what Buffett and 3G brought together some 10 years ago. I mean, what does the Berkshire Hathaway stake mean? It's still very substantial here, right? How does that play in?
Well, we saw actually about 10 years ago Trian coming in and trying to separate these businesses. Elliott's not going so far as to say, you know, we want a spinoff here. We want, a full separation of the business at this point in time. They're calling for more of a strategic review. So perhaps it's something where the company ultimately splits in two. Perhaps it's something where they just kind of separate from underperforming businesses and do bolt-on of more higher growth acquisitions. So that kind of remains to be seen. They're leaving it in the hands of a review at this point in time. But I think, they've definitely gotten the attention of investors today, although shares have come back from, the initial announcement that they were taking a stake.
And Elliott's sort of past history with some of these campaigns or maybe recent past, do you think they've got a good shot at making some changes here?
Elliott is among the most feared activist investors among corporate America. And that's because oftentimes when they push for something, they do tend to get their way. They don't just take a $4 billion stake in a company and push for changes and then kind of are expected to walk away and see what happens. As we saw with Starbucks, which traditionally Elliott hasn't gone after too many consumer names. That seems to be changing with Starbucks and now Pepsi. At Starbucks, though, they were effective in, seeing some change management at the C-suite, at the CEO level. That's not something that they're calling for publicly at this point in time. However, this is something that Elliott hasn't shied away from if they believe it's necessary to achieve the change that they want in a company.
Got it. And Leslie, thank you for rolling with the punches with me. I was getting confused about my activism here today with the Kraft Heinz, as I'm thinking through my brain as the words are coming out. So thank you for keeping me back on track.
Well, you said
here.
you were hungry, so there's a lot of food news.
I need some of those PepsiCo snacks. Thank you so much. I appreciate it very much.